So we're pretty much back with another one. We're going to be going over what trade I took today and how I took it and how I actually avoided losing money on a winning trade, because oftentimes you'll notice that you'll catch the direction right, but you won't make money or you'll get stopped out before said move happens. So this is going to teach you exactly how to avoid that and how to not actually overtrade and just stick to one win per day. So the daily time frame on GJ is currently bearish. I mean, that's easy to notice. I've explained what daily time frame bearish looks like. It's simple structure, right? So yesterday we had this giant candle up, but it never ended up breaking daily structure, which became a sign of bearishness for me. Now you can tell that it's not the case here, but we didn't know that coming into market open. So coming into market open, what do we see? We see that GJ is not really bearish on the 4-hour just yet because structure has yet to break, but it definitely looks bearish as far as price action, and the hourly will validate our bearish bias on the higher daily time frame, right? How do we say that? You see this hourly fair value gap here that gets validated, and this 15-minute fair value gap that also got validated, and this order block that gets revisited here. So we have many reasons to believe, okay, even though the 4-hour has yet to flip in structure, the odds that it does are relatively high because the hourly will validate a bearish move, and so does the daily. So the 4-hour is likely to follow so that all the timeframes can be in alignment and create a higher timeframe extension. That's something for us to look forward to coming into market open, right? So what do I see on the 15-minute? Market opens and we get a 15-minute liquidity sweep and a retrace into a fair value gap, right? And it's pretty much the only one that we have from the last extension, which started here and came into here. So what does that tell me? 15-minute is currently bearish because, as you can tell here, structure was never broken. Exactly why I called it a liquidity sweep. Hourly structure is with us, daily time frame structure with us. So we're really finding things that are going to protect our entries because we are waiting for liquidity sweeps. We are waiting for structure to align with us so that when we take that trade, market has little to no reason to actually continue on higher unless it's going to be a full-on reversal. So now that the 15 minutes good and we've seen what happened as far as retracements go, now we can scale down to the 5-minute. Now the 5-minute is bullish as I'm entering this trade, but the 5-minute doesn't necessarily have to be bearish for me to enter if I get a 1-minute invalidation, right? What do I mean by that? What I mean is, look, I could have waited for this trade here, right? Get the 5-minute expansion, get the retrace, and then see that we get this liquidity sweep at market open, at New York Stock Exchange open, and then trade this down. Could have been. What I've noticed is that this retracement oftentimes doesn't get back to this leg, and this gives me the highest price point to enter at. But I play either or, it just depends on how I'm feeling, but they're both correct. So 5-minute, you could have got one entry here, and I'm going to talk about my entry. The 5-minute's bullish, so we need to invalidate the said structure. By what? By seeing 1-minute liquidity sweeps and structure get built on the 1-minute that's currently invalidating the bearish structure on the 1-minute. Now that's a lot of words, I understand, so please stay with me here. So what do I mean by this? Very simple. Well, okay, screw it, let me be fast. So this 5-minute, we get the sweep, we get a break of structure, we get a fair value gap. I had thought that this was the retrace into the fair value gap followed by the break of structure, which is the only reason why I entered here. Normally, I would not enter here had I known that this had not tapped into the fair value gap. So this was slightly early. The next best entry that you should have took was break of structure, retrace into the order block, still nothing, still nothing, still nothing, all the way until pretty much that 5-minute flip here. Okay, so what I'm trying to say is, really, you could have took this move off of here. This would have been aggressive, but the real move was supposed to be taken off 5-minute. Like, we come into here and we wait for market open. We get a 1-minute push and we get a fair value gap validation, which happens all the way literally right before the move actually happened. So here was the fair value gap validation that you were supposed to use to enter the move. So with that being said, the move was very simple. 1-minute break of structure to invalidate a 5-minute bullish structure, and everything else was bearish. Therefore, we anticipate an extension. We catch the extension. We make money. Secure at 2R, 4R, so on and so forth. And that was pretty much this day. It's not that hard as long as you have a consistent strategy that's in